Hello guys, welcome back to UCFX. Welcome back to another wonderful video. Before we proceed to what we have for today, if you're new to the channel, please hit the red subscribe button, turn on the bell notification as well, so that we'll be encouraged to be creating videos like this. And as well, you'll be among the first to get notified whenever I publish good contents like this. So without further ado, let's hop into what we have for today. How to identify liquidity in Forex. So if you're new to smart money concept, I suggest you check the links below to learn a compiled video on detailed information that I've laid down about the smart money concept, how to trade it, everything that has to do with smart money concept, starting from the first episode to the 5th episode. You will see it there right in the description. So let's get into what we have for today. How to identify liquidity in Forex. First of all, to identify liquidity in Forex market, you need to first of all understand where the market is coming from. You need to understand where the market is coming from, right from the higher time frame down to the lower time frame. So you need to identify and know the market structure. So how do you do this? First of all, you start from the monthly time frame. As you can see on the chart, we have our monthly time frame. We are using US study as a case study for this topic. As you can see, the market is bullish on the monthly chart. We had a break of structure to the upside, and you would agree with me that we have a nice bullish order block inside this area. So as you can see, price is actually likely going to mitigate it, maybe to continue going up in the future potentially. So in respect to that, we have a slight bearish condition here on lower time frames like the weekly and the daily. So if you go down to the weekly time frame, the market is bearish on the weekly time frame. So after identifying the structure of the market, what next? You need to find the last point of interest. That's the order block. So you go down to the daily time frame to find clearer point of interest. So here on the daily time frame, as you can see, here on the daily time frame, we have a nice break of structure. Let's consider that this price action has not taken place yet. From this area towards this area, let's assume we have only this price action. So having this in mind, that the monthly is price is going to potentially mitigate a bullish order block in the monthly chart, but for the meantime we are bearish on the daily and the weekly chart. So having this in mind, you spot out and try to identify the recent point of interest trading in line with the daily bearish condition of the market. So let's identify the last point of interest. So our last point of interest in the form of order block, we will choose this area as our last point of interest. So after marking out your point of interest, what else do you need to identify? Before price would actually go back to mitigate our point of interest, our order block, there must be a mitigation. There must be liquidity, rather. There must be liquidity. So how do you now identify this liquidity so that you can catch this trade when it finally mitigates this order block? Remember, another block is a bearish order block is a last bullish candle before an impulsive move downwards, and the opposite is the case for a bullish order block, the last bearish candle before an impulsive move upwards. So here we have a bearish order block. As you can see, the secret behind this, or the reason behind this candle formation, is this: the smart money traders pumped in price in this area. That's why we have this green candle formation. They pumped in price, they bought this market right inside the zone. So less informed traders started going long inside this area, thinking that this market is going to move upwards. But the opposite is the case. The smart money traders added sells, taking out the long traders. So they need to come back as well to mitigate this buy that they earlier placed here. You know their buys are actually in a drawdown, so they need to come back and mitigate this buy orders. They need to come back and close the buy orders because they are actually in a drawdown. So how do they do this? They do this by creating liquidity. First of all, they create liquidity before going into this point of interest or going into these other blocks. Now, as you can see, we have this point of interest, this nice order block on our daily chart. If you go down to the H4 time frame, this is where we actually spot our liquidity. So liquidity is always found or situated behind or before an order block. So whenever you see the market consolidating or doing stuff like this, ask yourself, where is the nearest point of interest? Where is the nearest order block? Or in another way, you first of all try to always identify points of interest and other blocks in the higher time frame. Then wait for price to come back to that zone. Then before price comes back to this zone, it will first of all create this liquidity, which means this other block is going to hold. So here we have this liquidity in form of equal highs. What happened here? Traders that actually started shorting this market, maybe breakout and retest traders that actually started shorting this market. As you can see, we had the first move down, the second move. They tried to get in here again, but what happened? They were taken out. Why? Because the smart money still have their buy orders here that they need to close. The buy orders that are actually in drawdown, so they need to close these buy orders, and this is the only way that they can actually close these buy orders. They need sellers in the market so that they can buy into that point of interest. I hope you're getting it. So they need sellers, they need liquidity. That's what we actually call liquidity. They need liquidity to buy into this zone, then close these buy orders that are in drawdown. So here, remember, before you can buy in the forex market, you need a seller. So they need to create this market condition to appear as if it's going to continue selling, so that they can buy into these other blocks. Yeah. So this is where we have our liquidity. This is where our liquidity is situated. So liquidity are always behind, or are always in front of points of interest. They're always in front of other blocks. So anytime that you mark out your other blocks or your point of interest, there must be liquidity to confirm that other block. I as well made videos, I think check my channels, you will as well see videos I made on how to identify valid order blocks. So here we have our liquidity. So here we have our liquidity. Now what next? You now use your lower time frame confirmation to enter this trade. As well, on the video I made on order blocks confirmation, I as well made a video on how to actually catch these trades. And as well, as you can see as well, we have another liquidity in form of trend line liquidity. If you go down to prior to this move up, if you go down to the H1 time frame, or let's use the H2 for time frame. Here on the H2 time frame, you could agree with me that we as well have a trend line liquidity. So liquidity can come in form of equal highs, equal lows, and trend line liquidities. Here, the traders that we are shorting this market inside this zone, we are taking out. And as well, the smart money traders as well build liquidity while going up to mitigate their order block. What's this liquidity? They are trying to bring in buyers into this market so that once they mitigate this order block and start selling, people will be buying inside all these areas so that they will add more sales and take them out. So as you can see, we have liquidity on both sides. So markets, the forex market is all about liquidity. So if you're able to identify liquidity, it would help you to confirm more trades and trade high probability and get high probability setups, thereby increasing your win rate. So here we have this liquidity grabbed. We created another buying liquidity in form of trend line. They as well got taken out. So, and as well we have another liquidity. We have breakout and retest. As you can see, price broke out this area. So another less informed traders will start buying. They will start buying inside this area, thinking that this market is going to go up. So we have much confluence to actually take this trade after the mitigation of this order block. We first of all took out this liquidity. We have trendline liquidity. We have another liquidity, and this is what we actually call the buy side liquidity. I know this might be confusing. I as well have videos on it and Learn the Smart Money concept. If you go down, check the description, you'll see the link to the video. So we created another liquidity. Another less informed traders started buying inside this area, and they were as well taken out. So if you check right from the market structure, identifying the point of interest or the order blocks, there must be liquidity. So if you're able to spot these liquidities, it will actually enhance your entries trading the order blocks. So this is actually the way to understand liquidity. Remember I said they can come as equal highs, equal lows, and trend lines. As we have here, we have equal highs as our liquidity. As well, we have trend line as well as our liquidity. You can see we have our trend line. So that's it for this case study. Let's check out another pair. See if we can find out liquidity that had formed before tapping into our point of interest. So let's check other pairs to explain more about this liquidity. Okay, let's take NZD/USD. Remember, you have to know the market structure. You have to identify the structure of the market. Let me actually clear this. Okay, here we are on NZD/USD still. This is our monthly time frame. As you can see, we broke this structure right here, and after that, price came back, mitigated or filled this imbalance inside this area, then created an equal high. So which means price might actually go back maybe in future to take out these equal highs. But on the weekly here we are bearish, and on the daily we are bearish here. So let's hop into the daily time frame. But keep in mind still that we are bullish on the monthly, because this is our last point before price broke this structure. So this point hasn't yet been broken. So let's go down to the daily time frame. So here on the daily time frame, you are bearish. So you need to identify the last point of interest that had formed in the market in direction with the trend. So here we are on the daily chart. So as you can see, price took out these lows, which means there must be an order block inside this area that took out this low. So let's go down to the 4-hour time frame. Here on the 4-hour time frame. So here on the 4-hour time frame, this is actually the order block, the point of interest that took out these lows. So let's assume this price action hasn't taken place. Let's assume it's only this order block that had formed, taking out this low. So what do you need to see to actually consider or say that this order block is going to work? The only thing that you need is liquidity. So where are liquidity? As you can see, we have liquidity in form of trend lines and equal lows. Let me spell it out for you. Here we have trend line liquidity. We have trend line liquidity. As you can see, this trend line liquidity got seriously violated, got seriously wiped out. As you can see, price came here, pierced through this trend line. So we have liquidity here. And as well, if you go down to the 1-hour time frame, you would as well see liquidity in form of equal highs. So here we are on H1 time frame. As well, you can see we have liquidity in form of equal highs. Here is our liquidity. Here is our liquidity. So most breakout traders thinking that this breakout would actually continue going down. So most breakout traders thought that this market would actually continue going down from this area after breaking this structure, but they were proven wrong. So the smart money used it as liquidity to go back and mitigate their order block. As you can see, they bought this market inside this area, and the market went down. They have to come back and close their buys, which are on drawdown. So as I said before, they use liquidity to mitigate these order blocks. As you can see, we have the trend line liquidity. We have the liquidity in form of a retest or equal highs after breaking these lows, and after that, market entered into this point of interest or this order block. And then after that, what do we have? The market roaring down. So liquidity is always in front of points of interest. It's always in front of order blocks. Always identify your order blocks and your points of interest and wait for liquidity to play out. You would actually have a greater win rate. So I think this is all we have for this video. So do well to subscribe and turn on the bell notification button so that you're getting more videos like this. Yeah.